Thank you, everyone. Of course, we're getting some of our viewers reacting to the big story this morning about the Buhari's administration plans to refinance Naira-denominated short-dated treasuries into US dollars worth $3 billion of a new matured dollar notes for 3-year tenor. That's what the Honorable Minister of Finance, Kemi Adeosun, says yesterday at the end of the Federal Executive Council meeting, what you call the cabinet meeting. And we'll get some of our viewers. Ikwemosa says the FG loan refinancing structure may guarantee low cost of borrowing, short-term exposure to FX risks is a long-term consideration that the Nigerian government would have to worry about. And we have another of our viewers, Ageno, the second says, is this good economic policy? That's a question mark there. I don't have an answer to that here. I've got to ask those who are in charge and those who know about it. Okay, let's move on to the Nigeria energy sector. Where did we finish off with the big 7 on the market yesterday? It was another negative day as far as the big 5 oil majors listed on the market were, and you can see the numbers. Corn oil continued to lose shirt on the market, less about 5%, 32.86. The other big players, Forty Oil, Mobil, and MRS were unchanged when the market finished off. And then you have the other 4. Wando made 1.33% gain, back to 760. Seplat was at finished 470.110, and Total at 260.00. Okay, so let's just hang that in there, and we get into the power sector conversation. That's a very big one. Adim Okwesa, one of the research analysts at Financial Derivatives Companies, live here in the studios. Good morning.
Good morning, Moses.
Good. Electricity is king.
It is. It's a very crucial issue.
I'm sure you listened to that conversation about whether it's Dangote Cement or Lafarge or everyone. The cost of electricity is a major problem for everyone.
All companies across all sizes. It's a very big problem. Very big problem. If you remember, if you recall as far back as 2015, not too far back as 2015, the country was almost brought to a halt because of gas shortages. Manufacturers, telcos, banks, airlines couldn't render services. So it's a very big problem for the country, and we need to resolve this issue.
As far as let's go through some of what your team puts out together for today, as far as the burning economic issues. Of course, the price of oil, the price of diesel, and all of that. But if I flip that over, what I'm looking at as the bad news and the good news is that there are a lot of bad news. And that's what is on the screen. One of that is the fact that the power is down to 44 megawatts per hour.
Yes, indeed.
Diesel price is trending higher, and manufacturers are long on inventory and short on cash.
Yes.
Whereas cash is king.
Yes.
Okay, so that's the problem.
That's true. And the main why this is a problem, manufacturers can't access credit because of high interest rates. But what you spoke about earlier, about this FGN restructuring their debt, using dollars to...
I'm moving treasury bills into
I think
dollars.
The long term, the impact, gradually, maybe not now, but in long term, we should see interest rates trend downwards. And what that will do is that banks would have more liquidity. Banks will now be able to lend to the private sector, and yes, interest rates would come down, and yes, so eventually that should stimulate the economy. So it's a very positive thing.
In other words, this is pumping or punching the treasury bills balloon.
Yes.
Trillions of naira. Punch it there and bring it down.
Yes.
18%, nearly 20%
Extremely
is
high.
Sweet
Extremely high.
to investors, but it's a poison for any government, and Buhari's administration is not an exemption. We've been in this for a long time, so it's not just about this administration, because that's where interest rate is, isn't it?
Yes, sir. Yes, sir. It is very 17 to 25%. That's Nigerian treasury bills rates. If we compare that to international debt at 7%, that is very good. So if we average it, the average should be much lower than the 13 to 18.5% we're seeing on our treasury bills paper. So gradually we should see less OMO auctions, less treasury bill auctions, and what that will do is bring down interest rates.
Technically, less central bank printing money.
Exactly.
That sounds like good news on one side. But again, we will talk about the FX side of it.
Okay.
When the dollar goes strong, then we will have to decide.
But then again, I think that's a risk again, because we're exposed, foreign exchange exposure. We don't know what the naira will be in 3 years, the dollar will be in 3 years' time. So we might have to be paying more in 3 years' time. So that is a risk we have to take.
That's the risk. Yes. So it's more of our more global exposure, isn't it?
Yes, indeed. Than
domestic.
Yes, indeed.
Interesting. Let's go back to the electricity sector because I'm looking for power. Look at the power generation analysis and impact. A very interesting page. If we just bring that out, a little bit heavy, but of course we'll try to unpack that. Estimated loss is about 859 million. Analyzed at about 313.5 billion. That's about 780 million US dollars.
Ridiculous amounts we're seeing here. Ridiculous amounts and let's take account of these FMCGs companies that have to rely solely on alternative sources of energy. Because we have to, if, for example, now Nestle or Guinness, if a production process lasts about 3 to 5 hours, and Nestle or Guinness can't afford to rely on the national grid. Why? Because of disruption. If that production process is disrupted, that will lead to wastage and additional costs. So these guys have to rely solely on gas-fired or diesel-fired generators. And what that does, one can only imagine the cost, hundreds of millions of naira that these companies spend on alternative sources of power. And let's not forget that all these FMCGs also have suppliers. For example, Guinness would require guinea corn, maize.
They also, and the rest
exactly. They also rely on alternative sources of power. So, imagine if power is more affordable, cheaper. The impact on commodity prices would be extremely astronomical. Commodity prices would trend downwards.
However, I'm going to get to that. Just give me a few seconds. But do you think what we're seeing as far as at the level of the Federal Ministry of Power, Housing and whatever, put together, do you think you're encouraged by what we're seeing? One, in terms of the solar renewable energy conversation and the projects being discussed around the northern part of the country. Do you think we're also with the Mambila project? Yes. Do you think we're on track, the hydro project, and the restiveness, the rest